living adjustment that helped to buoy January, but it really is important because over 70 million people are now getting that extra bump in Social Security as inflation cools, but it doesn't cool. They're now finally getting a bump that's not so tepid, and that added to spending last year, and it's adding to spending right now. What I'm really looking for, as Steve said, is the underlying consumption patterns. Is there more strength in services, like we saw the upward revisions to the fourth quarter? The fourth quarter, with a big upward revision, was mostly in services, which actually accelerated. Overall consumer spending accelerated in the fourth quarter from the third quarter. That's stunning resilience and defiance by the consumer. And I think Steve is right in terms of the Fed is looking at that strength and sort of weighing is that going to cause a floor to form under inflation? In Waller's speech, he repeated what he said in February. What's the rush?
Diane, it's worth pointing out that Waller the other day said he didn't think the job market was weak enough to, or was too strong to really help in bringing down inflation. You know, he was pretty hawkish, and he was more hawkish the way you think about it, Morgan, relative to Powell. Powell said, hey, the last couple months hasn't changed the overall story. Waller came forward and said the last couple months has changed the overall story. So it's going to be interesting. And I kind of thought that those Fed folks who have spoken since the meeting have been more on the Waller and hawkish side, which is kind of unusual for a Fed chair that has such strong control of his committee.
Well, and that raises the question about what kind of commentary we're going to get from Powell when he speaks with San Francisco Fed President Mary Daly later today at an event out there as well.
Yeah, it's a good Friday if you're a Fed watcher, Morgan.
Yeah. Rick, want to get your thoughts on this?
Well, you know what? Here's my issue. That whether it's Waller, whether it's Powell, in the end, once again, the verbal guidance is a way to, in my opinion, keep the equity markets kind of with that carrot, the carrot that's coming down the road. Whether it actually comes or not, no Fed official knows what these numbers are going to be down the road, 6 months, a year, with regard to inflation. And with regard to 2/3 of the population feeling wealthy, I'm not going to dispute that, Diane, but what I will definitely point out is that at least half the population that I deal with anecdotally is just looking at the sheer change of the inflation, the price of things from pre-COVID to now. Yeah. And until we see minus signs in front of all these data points, that things are, this is really hurting. And if you're looking for the president's poll numbers to go up because we're fighting inflation here, it's not going to happen until we actually see disinflation. And I don't think Powell would like that.
Rick, I think the absolute issue is the level of prices versus the pace of change. We're talking about decelerating inflation, and you and I know what that means. But, you know, people out there that are still buying things are saying they really would like to have 2024 wages with 2019 prices. Let's face it. That's not how the world works. And it takes time to catch up on what was lost in terms of inflation. And even if on average they're slightly ahead, they're still feeling like they're trying to see increases in their living standards with stronger wage gains outpacing inflation. And that takes time to feel like you've regained the ground lost. And most notably, we've seen wages slow the most in the sectors that had leveled up and finally had these low wage workers that got to move from the shadows of the economy that were non-essential become essential, move into the sun only to get burned by that inflation. I absolutely agree with you on that. And I think that's why people are so angry about the shelter costs. Even though rents have come off their highs and are resetting, it's still unaffordable for far too many to even rent. We have rising homelessness among the working poor. These are working homeless. That is really hard to digest between 2019 and 2022.
Diane, I'm going to cut you off right there because we do have the number crossing. Rick has the details for us.
All right, here we go. The big moment we've all been waiting for, our February read on personal income and spending and all those inflation numbers. On the headline, as Steve pointed out, expecting up 0.4%, comes in at up 0.3%. Now, the revisions aren't showing yet, but maybe as we go through the rest of the numbers, they will. Personal spending up 0.8, up 0.8. That is a stellar number. 0.8 is the best number going all the way back to January of 23. If we look at real spending, up 0.4%. That is the best level going back to December of last year. And if we look at the deflator month over month, up 0.3 as expected. And here we go. Year over year deflator, 2.5, 1/10 higher than 2.4, which was the lowest level since February 21. This is 1/10 higher than that, but as expected, it really does break a streak of numbers moving lower. Now, let's look at the PCE core deflator month over month, and that is up 0.3. Definitely less than 0.4 in the rearview mirror, as expected. And my favorite is 2.8 on the PCE core deflator year over year. 2.8 as expected, which means it remains at the best levels since March of 21. Okay, revisions are coming in now. I'll hit the ones that are most important. On the year-over-year core, I just went over. Last month's 2.8 now becomes 2.9, so we're actually lower. But if I was the market right now, Steve Leisman, my guess is that these numbers are generally as expected, but we're not making progress on year over year. So the markets are going to have to fight that out.
Steve,
Rick,
want to get your reaction to this as I hear you say,
Let's
wow.
add to that.
Rick, you are the market, Rick. I don't know if you were the market. You are the market, man.
Today he's the only market.
Look, it's chill on the inflation numbers. It's hot on the consumption and the spending side. As far from what I could tell, I'm just income was 0.3, but outlays was 0.8. I mean, that's blowing me away. What did you say, Rick, about real spending was up 0.4%? That's inflation adjusted.
Yes,
is that 0.4%.
Yes, 0.4%.
Diane,
exactly
Diane.
Right.
All right, Diane, right here on TV, putting the pressure on you. Is this is gonna upgrade our first quarter GDP numbers, isn't it? What do you got? Can
Absolutely.
You do it on TV?
And in fact, I'm looking at the.
Do it in your head.
I'm doing in my head close to 2.5%. I'm thinking on the first quarter. So how's that for you? But I do think what's also important to remember, Waller pointed this out as well, and it's where everyone had declared victory. And Rick, you're right on the year over years, but the 3-month moving average, the 6-month moving average on all of these figures has moved up with these numbers, as far as I can tell, with the revisions as well. They've moved up. That is the wrong direction on momentum for the Federal Reserve on CPI, and with that strong consumption number out there as well. That's going to be, we already have people staking out the sort of pushback for a June cut. What's the rush? Wait a little longer. 9 of the 19 participants wanted 2 or less cuts, and it's only 1/4 point move by one person within that meeting that brings it down to 2 cuts for the year. I know that's splitting hairs, Steve, but the timing of rate cuts keeps getting moved out. We need to see a lot of improvement in terms of inflation in March before we get to a June cut, but also a big slowdown in employment.
I'm shaking my head, Diane. Diane, I'm shaking my head because I don't think this market needs to see anything from the Fed. The way they've been trading, it's been quite remarkable, right? I mean,
well, the market may not. I'm talking about the Fed.
Yes. Fed, I'm right. A very significant. I'll let Rick and Gordon talk about this, but I just point out you've had a really significant reset on Fed expectations, down 300 basis points for the year-end funds rate over the course, and stocks have gone up and hit new highs in that context. And I think that's the context for everything we're talking about here today.
All right,
so if a cut's still on the table, is the cut still on the table, people? Let's vote. If a cut's still on the table for 24, considering all the political issues with the election, that seems to keep the equity markets happy. It's when we get to that intersection where if we're not going to do the April-May meeting, which I don't think we are, let's say June's in play. Right, and let's say that June. Right, I think one cut's even enough. I think one cut's enough. But I think if we get down to the point where it's one cut, and the equity markets slip a little bit but stay within 3 to 4% of the all-time high closes that they've had, that then all these numbers will take on a monumental importance. And just real quickly here, not that it changes anything, folks, but we want everybody tuned in to get every detail. I will go through the 4 revisions very quickly. On real spending last month, that's the only revision that actually got taken in the wrong direction, from minus 1/10 to minus 2/10, okay? But all the other metrics are inflation metrics, and they actually went up a 10. So PCE, right, deflator month over month was 0.3 last month. It's now 0.4. The PCE deflator month over month core went from 0.4 last month to 0.5. And as I pointed out, the year over year went from 2.8 to 2.9. Just so everybody has their all the facts for how they want to think about their trading. Everybody tuning in on Sunday night / Monday morning.
Steve, I want to get your thoughts on what
Rick,
this does to, as Mohamed El-Arian on CNBC earlier this week posited, the possibility that when you have signs of a strong and resilient economy, inflation that's been moving in the right direction, but maybe getting stickier here in this quote unquote last mile, whether the Fed actually does away with this 2% target or at least gets more flexible around it.
Yeah, so the old saw, Morgan, in economics was give them a number or give them a date, but never give them both, right? You've heard that before. And I think what the Fed is doing, it's given us a number, but it's not given us a date. And the way it's going to fudge around the goal of 2% is the time that it feels comfortable in getting there. You'll note, my question I got the first question to Chair Powell at the last press conference. And I said, Chair Powell, how is it possible you're raising your inflation target, but you're not changing, or you really haven't changed the number of cuts you expect? Well, what does that tell you? It tells you that they're going to be more patient